Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Stephen Johnson of Mercia Ventures to talk about the Northern VCTs. Stephen, welcome to the studio. Firstly, what are the Northern VCTs?
Thank you very much for having us. The Northern VCTs are one of the more mature VCTs in the market. So originally launched in 1995 with a mandate to invest in early stage UK-based companies and in return deliver a continuous stream of dividends to shareholders and grow underlying NAV across the portfolio.
And for those who aren't familiar, who are Mercia Ventures and what's your role there?
Yep, so I'm fund principal for the Northern VCTs with Mercia Ventures. So we're part of Mercia Asset Management, which is an AIM-listed asset management group with around 2 billion in assets under management. The ventures part of the business is around half of that, and obviously the Northern VCTs making up a sizable portion of that. We're based around the UK, so we've got around 40 investors and portfolio directors. Obviously a large chunk of those based in London, but the majority are based around the UK, so everywhere from Bristol to Birmingham, Manchester, Leeds, Newcastle. And of those 40, 15 are full-time investing on behalf of the Northern VCTs and driving value across the portfolio.
And so where do the VCTs invest? I'm guessing there's a strong regional focus from those offices.
Yes, exactly. So we typically invest 3 to 7 million in early stage companies, as I say, where we believe that the companies have the potential to deliver outsized returns for the shareholders. And we're comfortable with the corresponding level of risk with the investment. We focus on 4 key sectors, so software and AI, consumer, health and life sciences, and deep tech, with a slightly larger weighting towards the first 3 of those sectors. As you say, we're investing around the UK, but I think the most important thing for us is complete alignment with the management teams that we're investing in. So clarity over what the future milestones that the company is working towards, and what's the plan to reach those milestones.
And do you have any examples of maybe some recent investments that you've made in the VCTs? And then we'll go on to talk about some of the more mature investments.
Yeah, sure. So a recent investment was a business called Scalpel, which is a medical vision AI business. So there's quite a complex process going into a surgery where a surgical tray is prepared. So all of the equipment needed for the operation is taken from suppliers to distributors, to sterilization units, and then ultimately to the theatre. And then subsequently, post the operation, all of that equipment is then taken elsewhere as well. So it's quite a complex process, and there's lots of room for error throughout that process. And what Scalpel have done is develop a product that allows for automated tracking throughout that process. So a very exciting business, one of these markets that you wouldn't intuitively think exists, but it is a huge challenge, particularly for the OEMs who manufacture the devices, and then the distributors as well. So they're helping those vendors to reduce. And then there's also a patient benefit in very extreme cases. Devices can get left in the theatre, sometimes in the patient, which is a very extreme case. But yeah, very, very interesting business.
Any other examples?
Yeah, so slightly later stage Risk Ledger, which is a cybersecurity software business. So they enable their customers to track the third-party risk, cyber risk amongst their supplier base. So a customer will come on board. They'll typically ask their suppliers to populate their sort of cybersecurity risk posture, and then it allows them to capture, evaluate, and then monitor that data on an ongoing basis. So the way it works is, as more customers come on board, more suppliers come on board also. You get this graph network type effect, where the more customers are on board, the more understanding the collective group of customers have of their suppliers. And then anytime there's an issue or risk within the portfolio, it can then notify the entire network, which is obviously hugely valuable. It's increasing in prominence, the number of cyber attacks which are going on, which we'll have seen in the news recently. Yep. And it only seems to be trending one way. So that business is trading well.
So Stephen, what about some of the more mature investments in the portfolio? Any good examples there?
Yep, so Send I can talk about, which is an insurance software business. So they sell their software products to large insurers, particularly commercial underwriters. So it's effectively a workbench that allows commercial underwriters to to do all of their work day to day. So typically in the underwriting process, there are a number of documents and artifacts that go into determining whether it's a policy they want to offer and also what the premium is. And send is effectively the workbench. They do all of their work. So as you can imagine, once the product is in, it's very sticky. And we believe it's the best-in-class product within the sector. So it's one we're very excited about. Obviously a large industry as well and large market opportunity.
Oh, very good. And obviously the ultimate goal is to create some exits. Have you had many exits recently? Any you can talk about?
Yes, so we had 3 full cash exits in the past financial year. So Gentronix, which was a toxicology contract research organisation, which was a 4.5 times return for the funds. We also exited Intuitive, which was a travel software business. So that was a lifetime return of 2.1 times, money on money slightly lower. At the moment, sort of forwards looking, all eyes are on CurrentBody, which is one of our portfolio, which we've talked about before. It actually the holding company is the Beauty Tech Group, but it predominantly trades as CurrentBody. But they're currently planning a main market IPO, depending on when this video is launched. That may be in the past, but it's scheduled for early October. So all eyes are on that at the moment.
It's been one of the workhorses in the portfolio, I'd say. It's always been in the top 10, sort of ticking away nicely.
Yeah, exactly. I mean, there's been different transactions since we originally invested, so we have taken some capital off the table in prior years, but it still remains our largest holding. But we've sort of diversified away, so I think it's around 6% of NAV at the moment.
So can we read anything into this? The environment for exits, I'd say for the past couple of years, it's been relatively subdued. Are there green shoots appearing? Is it starting to pick up for exits?
Yeah, I think so. I mean, as you allude to, and I'm sure the audience will know, the macro picture isn't sort of conducive to lots of exits happening. Companies, particularly with things like national insurance and just the general macro instability, it definitely isn't a sort of buoyant period for exits. But we still see where there are very strong synergies between an acquirer and acquiree. We're still seeing exits happen. We're still seeing sort of active processes ongoing. So I think, yeah, there is still opportunity there. But as you allude to, it's not a straightforward market.
But good to see the IPO market potentially coming back. It's a good thing for shareholders. Yeah. So turning to risks then, how much risk would you say you're taking in the VCT?
Yeah, I mean, investing in early stage companies is inherently risky, relative to other asset classes. So there's sort of no getting around that. I think, as I talked about, on a portfolio basis, we are very well diversified, and we do that intentionally. That we don't want too much of our overall NAV tied up in one asset, particularly where there is risk around that company. We also do what we can structuring wise within investments to minimise the downside whilst uncapping the upside. And I think the combination of those things, plus, as I talked about before, just good discipline in working with the portfolio, strong decision making, we believe delivers long-term results. And we think for the long term, believe our performance supports that.
As you mentioned structuring investments there, what do you mean specifically by that? Because I think it's quite interesting, the liquidity preferences you can take on some companies. Yeah,
I mean, to pretty much every investment we make, we do apply a non-participating preference, which means on an exit or realization, we get the greater of our money or the proceeds from the investment, and it's also prior ranking in the capital stack, such that if the total inflows from the transaction aren't sufficient to reach our percentage holding in the company, then we get our original investment back. So it's quite a nice downside protection, but then similarly it sort of uncaps the upside as well.
So really then, if you invest £5 million into a company, as long as that company sells for £5 million and you're the only investor, you'll get the £5 million back first.
Much basically. Simpler way of explaining it, yes, exactly
Good.
that.
Good. And so just to summarise then, to wrap up everything we've discussed, for those who are looking to back a VCT this year, why should they back the Northern VCTs?
Yeah, I think it's a combination of a lot of the things we've talked about. We're one of the larger investment teams based around the UK, which affords us access to a number of transactions that perhaps others wouldn't see, as well as being highly active in London. I think we do the basics well, day in, day out. We're very disciplined about what we do. We're never satisfied with sort of how we're performing, and continue to look for ways to improve. And there's as I say, we believe a strong portfolio of companies coming through and maturing, which are delivering exits both in the near term and then in the years to come as well.
And I suppose those exits as well, probably pretty good for dividends, and the outlook for dividends must be looking reasonably healthy.
Yeah, so I mean, we have a published dividend policy for the funds, and then any time there's sort of outsized returns outside of that, the boards will look at what they do. It's ultimately the board's decision on sort of dividend proceeds, but yeah, we're feeling pretty good at the moment.
Oh, very good. Stephen Johnson of Mercia Ventures, thank you very much.
Thank you for having me.
If you're watching on YouTube, please press like or subscribe to the channel for more.